Okay, good morning, ladies and gentlemen. Welcome to Almus Market Mornings with Shikhar Garg. We are host with the daily dose of financial updates. Now, we are seeing a lot of things happening across in financial markets with majority commodities soaring even further higher. Now, oil for a very brief moment did come down and gave breathers to a lot of people, but eventually jumped back up. We are seeing also a lot of commodities rising. Nickel, for that matter, saw a jump of 65%, which is quite unusual for financial markets to see a jump for commodities in this manner. So geopolitical uncertainties, which are still continuing, can be one of the primary reasons. So I invite Pankaj to tell us what's going on and what should we be looking forward to. Pankaj, please go ahead.
Yeah. Good morning, everyone. These are times when we have hardly any positive news to highlight as we start the market. Overnight fall in US market confirmed that Nasdaq is in a bear trend and Dow in a correction territory and can fall much more. Broader European stocks are just shy of entering a bear market. Investors are increasingly concerned about a stagflationary situation as we are facing high inflation, mainly due to the supply side issues, surging oil prices. Even other commodities, while economy is expected to slow down with lower consumptions. As Russian army continues its insurgency and fighting continues, geopolitical risk remain elevated for the investors. Potential ban on oil import from Russia by Western allies and signing of an Iran nuclear deal facing new challenges have been the latest triggers for equities slumping, while oil jumped to 14-year highs. As far as we know, Germany is saying that we will be importing oil from Russia. According to one institutional analyst, if Russian supply of 5 million barrel per day is banned, we can see crude oil prices closer to $200 as well. But it's not just about the oil, which has doubled in last 3 months. Many other commodities, particularly those where Russia is a significant exporter, have soared, while nickel doubling in last 1 week and wheat rising 36%. Sooner or later, monetary policies will take account of all these and should do something about it. The current situation is posing several well-known challenges to the Indian macros, which has started to reflect the exchange rate, while the stock exchanges have already been discounting them. There will be efforts from central bank to minimize the impact on inflation through currency intervention. But the pressure should sustain, and we expect a gradual depreciation to be the course in short term, with intermittent rallies on positive news in the war front of a short-term dip in oil, which looks quite overbought. Now, considering this, we have to also see that other Asian currencies are not depreciating that much. So once this thing settle down, we will be looking forward for rupee medium-term course. Considering that this is a quarter and year end, there will be a corporate flows which may slightly make up for lack of foreign inflows. We can expect that the central bank to set a new range between 75.5 or maybe 77.50 on a higher range. We will still try to keep moves balanced, or central bank will try to keep moves balanced rather than allowing for a one-way slide, which will result in a major disruption. Due to continued risk aversion sentiments, US 10-year saw lowest yield in last 2 months, last evening at 167, but bounced back sharply back and now dealing at 1.79. US 2 years continue to deal at a higher range of the range, currently dealing at 156. Now, just to highlight, Fed fund futures are pricing 97% probability of 25 basis rate hike in next week. It's almost sure that they won't be going for 50 basis rate hike. Indian 10-year G-Sec yield closed at 689 yesterday and expected to deal in a range of 687 to 691, and should be getting some benefits of some consolidation in crude oil prices. Now, coming back to cryptos, cryptos are also being volatile along with the other asset classes. Bitcoin is dealing within a range of 34K to 45K in last 1 week, currently dealing at 38K per unit. Now, according to the latest development which we have read, Ukraine has started using cryptos for buying military gear. That's all from me. Thank you.
Okay, interesting. Pankaj, just to harp on to the last point you mentioned, where the cryptos were being used, rather, cryptos were initially being donated to Ukraine and in the form of Ether or Bitcoins, which were then used by Ukraine to, fund their defense supplies. this is and probably this is the current times for need for it. So this is one of the points that also Yuval Noah Harari, one of the very known authors, mentioned, that years of peace has brought down the spending in defense. But now, as we get into the war kind of situations again, we have seen a lot of budget spending being shifting to defense again. Now, this is a kind of a concern, because the shift in budget from other sectors means lesser money being spent on healthcare and education, where the priorities for budget funding is required. So, guys, this is how wars affect us. Let's see how things move ahead. That's it for today. For the time being, we'll catch up again tomorrow. Thank you.